The markets faced a major shock yesterday after the price of US crude crashed below zero for the first time ever. A combination of the coronavirus slump in demand, too much supply, rising storage costs, and a technicality in the futures market led to sub-zero price levels. Joining me to discuss the commodities complex is Hector McNeil, co-CEO at HanETF. Hector, good to chat to you. I mean, clearly we were going to talk about gold originally, but I couldn't not talk about oil, given the extraordinary times that we're in. I mean, what did you make of the moves that we've been seeing this week?
Yeah, pretty incredible, really. And thanks for having me again. But I've been involved in commodities now for nearly 20 years, and I never thought I'd see the day. But I do think that I also everything's driven off the back of closing the economy, isn't it? So we never thought we'd see that en masse globally, within a series of days. So I suppose at the end of the day, we're going to get outcomes like this that are a bit strange and a bit out of the ordinary. But this is definitely a bit of a game changer.
Yeah, I mean, it's just been interesting to see really the dramatic slide since the start of the year. I mean, US crude was up in the mid 60s. Now, at least on the IG platform, it's in the teens. I mean, kind of roughly, where do you think fair value might be?
Well, I think the interesting thing about commodities is that, we trade financial instruments, which really hides us from the realities of the physical nature of, what goes on in terms of getting commodities out of the ground and then transporting them around the world. And I think the sad reality we're in at the moment is that, a lot of the commodity like oil has just gone from, mass consumption to zero. So I think that that's the thing that's sort of been the HGV into the wall at 80 miles an hour. But I think you only have to really look at the Brent price. I think to see where fair value is really. It's a bit more of a stable benchmark. And I think that's sort of around about $18-20 now. And I would say all the sort of other benchmarks around the further down the futures curve or whatever is pointing to that. So I think this will correct itself in the next few days, and it is really just a bit of an abnormality, really.
Yeah. Okay, well, let's move on to what we were meant to be talking about then, which is gold. I mean, yesterday's crash in oil prices definitely boosted some of those safe haven assets like gold and silver. Give us your outlook for gold prices, because, I mean, at least on the IG platform, it was coming into resistance around $1,700 an ounce last month, kind of managed to break through, then it retreated again. Looks like it's testing that level once again. I mean, do you see more upside to come?
Yeah, I mean, I think it's from a personal opinion, it's not a firm view, but a personal opinion. I think we're going to be back in the 2000s, not in the not too distant future. I think the reality is that I think the markets are pricing with a degree of optimism, which, if you actually look at the any way out of the coronavirus, from a going back to work scenario or getting back to normal, you can't see that happening in months, never mind years. So I think the effect of this is going to be a long drag. So I do believe that 2000 is going to be tested pretty soon, because gold really does hold its own from that perspective. And I think one of the only reasons it's now where it is now is simply because it's also used as a pretty decent liquidity tool. So lots of people use it for cash management, which is a relatively new thing. And I think due to the advent of financial instruments like ETFs and futures, so I think over the long term that will be tested. So I think 2000 is a pretty comfortable level for this to get to in the not too distant future.
Yeah, I mean, and the last time we spoke, we were talking about the launch of your Royal Mint Physical Gold ETC RMAU. That's now hit $200 million in terms of AUM. Talk to us about how the coronavirus and all of the concerns out there are impacting demand for this ETF.
Yeah, well, straight off the press, it's actually hit 250 today. So
Wow.
it's probably
Congrats.
the fastest growing gold ETF in the world at the moment, which is pretty incredible, really. But the reality is, I think what's really resonating well with clients is that when you look at the majority of gold ETFs out there, and there's plenty of them out there. I mean, we were the originators of the original one when we were founders of ETF Securities. But the reality is that 90% of gold ETFs hold their gold at either HSBC or JP Morgan. Now, those are great banks, but essentially when people are buying gold, they want to hedge themselves against financial systemic risk. And really, that's resonating superbly with the Royal Mint. Not being a financial institution, being owned by the UK Treasury, and being exposed to vagaries of the financial system. And also, I think having the gold placed in a more remote location, i.e., Cardiff, outside Cardiff in Wales, rather than a big metropolitan centre like London that really is hit hard against things like war and terrorism, but obviously we've seen the concentration around Corona as well. I think that's resonating really well with end clients. So that's gone terrifically well. And I think the spin off to that as well with the Royal Mint is they've seen a massive increase in demand for their physical business, coins and bars, and they've got thousands of clients who are buying, sovereigns and Britannias and kilo bars. And I think that resonates well with clients as well, because they can buy the ETF as a sort of first stage of a hedge to that sort of risk, but also knowing in the comfort they can always convert that into sovereigns and Britannias and bars if they really want to get physical ownership down the road, which has gone down really well.
All right, brilliant. I mean, are you sort of thinking about potentially launching any other ETFs within this sector, like on silver, for example?
Yeah, I mean, I think the natural sort of evolution for the Royal Mint is to look at the other precious metals, and I would include silver, platinum, palladium, and potentially even rhodium as well in that fold. I think what's one really nice benefit of RNAU is the fact that it only uses responsibly sourced gold. This was a policy brought in by the LBMA in 2012, which means essentially you don't have things like conflict gold in your holdings. Now, if we could actually expand that out to the white metals, I think that would be a real advantage to the market and give some sort of ESG screen to holding precious metals. So I think over time that will definitely be a focus for us to look at.
All right, then in terms of your outlook for silver prices, I mean, it's kind of been in consolidation mode over the last few sessions, but broadly, since the lows about a month ago, it's still rallied by about 30%. I mean, where do you stand on gold versus silver?
Yeah, well, I think there's probably silver sort of bridges the gap between the white metals and the and gold. I mean, it's half what I would say a precious metal and half an industrial metal. I think there was a time in history when there was more patents outstanding on silver than any other industrial metal out there. And actually its value says that it's probably not very precious. It's significantly less value per ounce than gold or platinum, palladium. But I do think it does have that sort of connection with the gold silver ratio. And obviously historically it's been a store of value for coins or bars or whatever. So I do think there is a bit of upside from there, but I think it's generally probably seen more of its bounce due to the due to the bounce in the equity markets than its precious metals content. But I do know there's a ton of fans out there of silver, so it probably has got some upside alongside gold as we see the full effects of the corona virus impact on society and the economic outlook. So I think that you will see some more safe haven buying as that goes through.
All right, Hector, thank you so much for your time.
No problem. Thank you.
That was Hector McNeil, co-CEO at HanETF. I'm Victoria Scholar, and thank you for watching IGTV.